There we go. Can you hear me?
Yeah, I can. Can you hear me?
Yeah.
I had to unmute my microphone. All right, so I just got a text from Justin that their internet is not working. So he says he's trying to get on, but it may be a little bit. So
Okay.
let's go ahead and get started. This week was a little more difficult. I felt like I was doing a lot more accounting than econ, but
You don't like accounting?
I'm okay at it. It's just not my favorite thing.
My page will load.
So there were some of the questions this week that I wasn't 100% sure on, so it will be nice to go over them as a group.
And okay.
Yeah, I just barely got it pulled up. I'm ready.
You are ready? Is that what you said?
I am ready. I just got it pulled up right now.
Okay. Oh.
All right, so we all have the group quiz up.
Yes.
All right, so we can go ahead and go through this, and then if Justin joins us, great. If not, we can kind of give him the link so he can at least see what we talked about. So.
Okay.
All right, so the first question.
Would it be the third one?
That's what I was thinking.
Yeah, because it is the production, but yeah.
Because it's not to assess the economic efficiency of specific industries, and it's not to
No, I
determine.
don't think it would be the fourth one.
Yeah, it's
Yeah.
not the fourth one, and it's not. We're not analyzing environmental costs.
Yeah.
So
I think
to
the
me,
third one does.
that's the only one that made sense.
Okay. Gross domestic product. Isn't this the second one?
All final goods and services produced in an economy in a given year. That's what I got.
Yeah.
Yeah, because it's gross domestic product, isn't it? Isn't that what it stands for?
Yeah.
If I remember correctly. Yeah. Okay. Cool. To avoid multiple counting of national income accounts.
Is it the first one?
That's what I got. Only final goods and services should be counted.
I haven't
Because
read all of them, but that sounds good.
yeah, because your intermediate goods and services, or your intermediate goods would be considered double counting. And then both final and intermediate goods, that would still again be double counting. So yeah, really that's the only one.
Because pretty much you'd count them as they were intermediate, and then you'd count them when they're final, right? That's why.
So what you do is you only account for the final goods and services, because if you were to account the intermediate goods, or goods that have been, so if you were to count it as, like, I'm trying to think of the best way to explain it or how it explained it in the book. So there's your final product, but then your final product is made from intermediate products or products made by other people. And then those products are used to go into your product. So if you counted intermediate products and final products, you would be double counting some of those.
It's kind of like parts of a car is the intermediate goods, but then the car is the final good.
Yes.
I got you. Okay. I guess I misunderstood what those were.
I'm texting Justin real quick. Give me just a second.
Okay, subtracting. Okay, value of sales. Nice. Wouldn't this be profit and wait, no. Yeah, profit and cost.
All right. So which one are we on now?
Number 4.
Is it the third one?
Value of the sales. I'm thinking it's your sales minus, well, if we're going to talk accounting, it's sales minus your cost of goods sold. It's what they paid for their stuff. Which wouldn't that be what they had left is their profit, was my thought. But I don't understand the cost part.
So subtracting the purchase of intermediate products and supplies from the value of sales. So that would be value added from economic activity, I'm pretty sure.
That's probably just the profit part of it.
So what you're doing, I was going to see if I could pull the textbook up real quick. But, so what it is, in the textbook, it actually had a really good diagram.
I can try to go find it.
That kind of explain this one. So that's... So let me see if I can share my screen with you real quick. I'm trying to remember how to do that.
Go to the top left, and it's the green screen with an arrow. Pretty sure anyway.
So are you able to see my screen?
Yeah.
So
It's kind of small, but...
yeah. So what it's saying is it's giving the sheep ranch or jacket, basically making a jacket. So it's saying that this first firm, A, is the sheep ranch, and their sales, the added value is 120. And then firm B, what they bought the wool for is 120. And then they process it and sell it for 180. So their 180 that they sell it for minus the 120 they purchased it for is the $60 added value to the total value of the product. And then that continues. So the coat manufacturer buys it for the 180 and then sells it for 220 after they do what they need to. And that is $40 added value. So does that make sense?
Are you adding value to the product? Because I was thinking you're adding it to the company.
So it's because we're talking about gross domestic product here, so it's actually for the product.
I'm
So,
just stuck in accounting, I guess.
yeah, so the value added is that total income that was
Okay.
made. So that's, in that regard, you're correct. So that's your, so they sold it for, well, I guess it was 350 is what they told, the total that they sold it for. So that was all of the added values added up. Does that make sense?
Yeah. Okay.
All right. So I don't know if I did a very good job explaining that or not, but
It's all good. And I can go back and look at it more and read about it more too. Number 5, isn't that 3?
Yeah.
The third one?
Yeah.
Expenditures approaching income approach.
yes. Yep.
Okay.
And this one I wasn't sure about. Oh, price index. Okay, so that is.
Is it the first one?
Let me go back to the book on this one because I just
Yeah, you
read
can
this.
look up price index. Let's see where it is. I just need to. I wish I had a second screen. But it's not so small.
Yeah, so it is your price index in a given year is your price of market basket in a specific year divided by the price of the same market basket in the base year times 100.
So the first two say are subtraction. The last two are division. If we're gonna go with division, because isn't that what you just said?
So yeah, the actual formula here says price index in a given year equals price of market basket in a specific year divided by price of same market basket in base year.
Would that be the third one?
And this is the part I was having a hard time understanding.
Okay, measure of price of specific price of.
Okay, so in the actual economy, a price index is a measure of the price of a specified collection of goods and services.
Oh, wait a second. Okay, I know the page you're on. If you go down a little bit, there's real GDP equals nominal GDP divided by price index. If you undo that formula, then we'll have what the answer is. So it's nominal divided by real. Should be the answer. Do you see what I'm looking at?
Yeah. Yep, that makes sense.
Sounds good.
That was kind of confusing, though.
Yeah.
Looking at like the actual definition of price index, it didn't make any sense with the choices we were given. These years, 2005 GDP.
Oh, if you go even further down, It says price index equals nominal GDP divided by real GDP.
Oh, there it is. Yeah.
So it actually gives you the actual further down.
Okay. That's okay. We got it. So that's all that matters. Okay. Why is that?
So if the index, so we know that that would be, so basically 92 is your nominal divided by your real.
I'm confused.
So does that mean that it's 92%?
I don't know.
So does that mean that prices in 2004 were higher than in 2005?
I would think so.
So it would be the fourth one?
That's what I think.
I don't know. I'm confused. So I don't.
Because I was trying to understand what the price index actually does,
Right.
or what that percentage means.
Well, price index is nominal. Real. Nominal is higher. Base here.
I'm pretty sure that that's what it would mean. Because if you look at the example, it's showing that the price index is like 150%
What is it
on year
looking at?
3. So I'm on page, I guess it's 164 or 163. It's
How do you
that
see?
table 7.5.
Okay. That's
If you go just down from that, it says the index number tells us that the price of pizza rose from year 1 to year 2 by 100%, and from year 1 to year 3 by 150%.
right.
So
Does 100% mean there's no change? I don't know. I'm confused.
So rose by 100% means it doubled.
Okay.
You can't.
I'm so bad at math stuff.
It's confusing.
Ugh. That's why I've been dreading taking this class, because I don't.
Okay, price times 92.
Yes.
Specific year. I think. Hold on, let me read it again. Yeah, I think it's the fourth one.
That's what seems to make sense to me
Because I
based on
think
what
if
I'm
the
reading.
base year was higher, that's when you would have, well,
I
you
think
would
it
have a
probably.
fraction, wouldn't you? If the one on top is not greater. Anyway, I think it's the fourth one.
I think that's probably right.
Okay. I'm good with that.
That's the one that seemed right to me, but I wasn't sure. So
Yeah. Economy of the total expenditures for market cash. Base year in year 2. That's what I was supposed to do. Okay. So for this next one, we're doing 5,500 divided by 5,000?
let me see.
No. times 100. So I have 110.
That makes sense.
I just plugged it into the formula. Is that what you got?
Market basket. Okay, so that's the base year. So yes.
Okay, cool. Answer the question. Okay.
And this one's a little confusing because so I did figure this one. I think I've got the correct answer on this one, but what we're looking at, it says answer the question based on the following price and output data over a 5-year period for an economic for an economy that produces one good. Assume that year 2 is the base year. And then what it's asking for is it says refer to the data above in year 4. Nominal GDP would be. So
right,
your
so you take.
nominal is unadjusted, so that would just be your output times the price.
Right. So, and then you divide, so it's 18 times 5, right?
Yep.
And then divided by the 30 for year 2, which I got as 3. And then if you multiply it by 100, 300 isn't an answer.
So it's just asking what the nominal GDP would be. So you don't have to do, it's not asking for a price index.
Oh, wait.
And that's what I started doing too. But it's
So it's
asking
90.
for the, so it would be 90.
So you don't have to know that year 2 is the base year. They were just trying
to put that in there then. That's weird.
Yeah, it was just trying to
Trying
throw
to
extra
trick
stuff
me.
out there. Yep.
Rude.
At least that's what I got. That's what I understood, is that it would be.
No, that makes sense. Nominal is not adjusting, right? And real is. So it'd be the third one?
Give me just a second. I'm trying to.
I remember correctly. Real. Yeah.
Yeah, I think that one.
I think it's 3, because nominal is when you don't adjust it for inflation and stuff like that, and real is.
Yeah.
Yeah. Yeah, that's what I got on that one.
Perfect. The following are incomes that have been received from the nation's household. My first instinct is to say the last one.
I think I read the question wrong, because the one I marked I don't think is right. Let me reread the question.
Don't forget the accept.
Yep.
Oh, wait. But not received. Okay. So
Not received. So that
then
would
I
be.
take my answer back.
So it would be 3, I believe. Wait.
What is transfer payments? I don't remember what that is.
Following are incomes earned but not received.
A redistribution of income in the market system?
So it would be, so corporate income taxes, that's earned, but you pay that. So that's, you don't receive that, but it's what you've earned. Social Security contribution is something you've earned but don't receive, and it's the same undistributed corporate profits. So that's, you have invested in the company, and so if they grow in profits but don't distribute those, then that's money that technically you've earned but have not received.
And
That's kind
transfer
of what I was
payments,
thinking
you don't
there.
earn those, right?
What was your question?
Transfer payments, they're not something that you earn, I think. I don't know.
I don't know.
Think.
I
Yeah.
would agree with him though.
Well, yeah, I agree with him too.
Okay.
Yeah, that's where I was at, but I mean, I could be overthinking it too. So
Well, you put up a good argument, so. Personal income will equal disposable income when.
and this one I had to go back to the book as well.
Yeah,
So
disposable.
if you go under, where was it? Was it other?
Other national accounts, is that what you're looking
Yep.
at?
Yeah, and it was disposable income. It says
Personal income.
disposable income is the amount of income that households have left over after paying their personal taxes.
So it's the second one.
Yep.
Okay, that was my first instinct. So, cool.
And this 13 stumped me because I really was thinking about it and I can't figure out what it would be. Oh, does not include.
You keep doing that to yourself.
It's the not.
It's all of those negatives, the negations or whatever you'd call it in the sentences.
Yeah.
Does not include which of the following activities household spending to enhance security of their neighborhoods.
Wait, which question are you guys on?
13?
Wait, when was 12? Oh my gosh. Wait, so number 11. Maybe I just zoned out and I missed a question.
Number 11 was transfer payments.
Number 11 was transfer payments?
Yeah.
Yep.
I think I like zoned out or something. And then 12 is the second one?
Yeah,
Yeah.
personal taxes are 0.
Okay, 13. Okay.
I keep falling behind, but that's because I'm marking on the paper that I printed out that I answered on previously. So I'm like answering it on here, and then I forget to put it on the actual quiz online.
Well, at least you have it written down. That's what's important. This is the last one.
This one I'm not really sure on.
Well, I feel like all of them are adding to something, whereas families eating out in restaurants, well, I guess they're adding money, but I don't know.
Maybe couples remodeling their own homes? I don't know.
Okay, I'm going to read the definition of GDP again. If I find it.
I think it would be couples remodeling their own homes because they're not using services or anything like that to do it, but I could be wrong.
Well, but they're buying stuff.
True.
These are all people buying stuff, though.
Where is the stupid definition? Okay. I'll find it.
It's
It
the
was
total market value of all final goods and services produced annually within the boundaries of a nation. So all final goods and services.
Produced. I don't know. I feel like in the first three, they're adding something to make something better. I could be totally misled in my way of thinking.
I guess that's true, because Families eating out in restaurants, they're just consuming and not producing anything.
Right. Like couples remodeling their
Yeah.
own homes. They're making their home net worth more. Household spending to enhance security. That's adding security, and like kind of net worth of that neighborhood goes up too. And then installing anti-pollution equipment. I could be totally wrong, but logically that's what makes sense to me.
Yeah. I mean, it does make sense. That one's just a tough one, so I
I'm
don't
sorry
know.
if it's wrong, if that's what we're going with.
Oh no, it's all good. Yeah, some of these are a little tougher than others.
What would be the last one, number 14?
I mean, that one would make sense.
Yeah, I see that one.
Excludes non-market transactions. Therefore, GDP tends to underestimate the amount of production in the economy.
I don't think inflation matters.
Yeah, I think it's the fourth one.
First
The
one?
fourth one?
The fourth one, so.
Fourth?
I was like, wait, I'm just confused.
Sorry.
That's what I would say is the fourth one. Underestimate the amount of production in the economy.
Okay.
But
That.
I could be could be wrong on that one too.
Is it
This
illegal
first
activities for the next one?
I don't know. That's this one I was gonna look up again.
underground economy. Most participants in the underground economy, however, engage in perfectly legal activities but choose illegally not to report their full incomes to the Internal Revenue Service.
So tax evasion.
Yeah.
Okay.
That's what I was thinking that when I first looked at unpaid work, but then I was like, no, I meant not reporting or not paying taxes on your work.
Yeah.
Mm-hmm.
Which is still illegal.
It's under the table stuff.
Okay, yeah.
That's actually a good way to remember it.
Okay, and this 16 was process of elimination for me. So the expenditure approach. So if I remember correctly, GDP does not include any secondhand clothing or anything like that. So that's why I eliminated number 2.
Oh, yeah.
And then stocks and bonds, because they don't produce anything in the economy, they're just transfer of ownership rights. That was not included in GDP either.
Would it be the first one?
That's what I did, but I'm not sure. Government spending on welfare programs.
I wouldn't think that. I don't know.
Let me go back and look at the expenditure approach.
Seconds.
Well, in the definition it says it's made up of all final goods and services. So I guess welfare is a service, but it's not. I don't know.
Government purchases. The third category of expenditures in the national income account is government purchases.
Wait, so it is the government one?
I don't know.
Isn't that what you just read?
So it says the following is included in the expenditure approach. Yeah, it does have that listed. The third category of expenditures is the national income account, or in the national income account is government purchases, officially labeled government consumption expenditures and gross investment. These have three components: expenditure of goods and services that the government consumes providing public services, which would be welfare, I would believe.
Yeah.
So I would say probably
The last one?
last one on that one.
For this one, the second one?
Yeah, that's what I put.
Okay.
And this one I put number 3. A nation's export of goods and services exceeds its imports. Because
I would agree with that.
net exports is exports minus imports.
Imports, yeah. National income.
No idea.
How come Sock's pawing at the thing? He's gonna scratch it open. Get the thing for him.
So this one, I did number 3.
Oh. I don't know. Okay, why?
So, because depreciation, let me make sure I read the question. Yeah, so depreciation, let me see where it actually had that in the book. So under, I guess it's page 159, it says consumption of fixed capital. I'm trying to see where accounting for depreciation results in a more accurate income for the
Wait, so you do count it?
So you do count it. Yes, I read that wrong. So it would be number 4 then. Oh, wait.
What?
So national.
No, they add it.
I thought they added it back.
Why do national income accountants add these indirect businesses taxes to wages, rent, interest, and profits in determining national income? So it's the other one. Wait, that was all of them then. I'm confused.
National income. Employee is the total of all resources of private income, employee compensation, rents, interest, proprietor's income, and corporate profits, plus government revenue from taxes on production and imports. So, depreciation and consumption.
So number 3?
Yeah, because it does include rent, it includes interest, and it says there, plus government revenue from taxes on production and imports.
Wait, isn't that the one we were just on though when we said that it was counted?
That is counted. So that's what I was saying. It would be number 3, depreciation or consumption of fixed capital.
No, but we're looking for what's not counted.
Depreciation and consumption is what's not counted.
What I'm saying is I thought we just said that it was. I don't know. Maybe I'm somewhere
So
else.
it says here national income, which is what we're looking at. So it says national income is the total of all sources of private income, employee compensation, rent, interest, proprietor's income, and corporate profits, plus government revenue from tax on production and imports.
Yeah, I see where you're looking. Okay. That's the actual definition, I guess. So, we do 286 divided by 88. I got 325 billion.
Yeah, that's what I got too.
All right.
Are we ready to submit then?
I guess so. I think we did the best that we could, so.
Okay, submitting.
We got an 85.
That's not too bad.
Yeah, it's not too bad.
Which ones did we miss?
Number 7.
13.
Okay. That was, so
It
7
was
is,
couples.
Oh, okay.
Remodeling their own homes.
That one
What was 7?
Yeah.
Oh. We're higher.
yeah, that, I don't, base year. Yeah, I don't know on that one.
Oh well, we didn't do too bad.
Yeah. And 16, what was 16? Oh. Spending on meals by consumers at restaurants. Well, yeah.
Yeah, we missed a few, but it wasn't too bad.
I feel like those were all the ones that we were kind of hesitant on anyway.
Yeah.
So I don't feel too bad about that. At least we weren't like super like, this is the answer, and then it's like, no.
Yeah.
It makes me feel worse. Okay.
So I have to go because I have another meeting.
Yeah, I
Um,
actually have to go somewhere too, so I might just work on the mind map on my own this week just because I don't have time to do it right now, so.
Sounds good to me.
So, and we can always work on it individually and then kind of pass it around and see what everybody thinks. So we can go that route too, so that we kind of work together on it. But
Okay, sounds good.
Yep.
alrighty.
See you
And
next
then
week.
I will submit this here in a little while. After I get back from my meeting, I'll go ahead and submit the link.
Okay.
Alrighty.
Cool.
See you guys
Thanks.
later.
Bye.